Hello, and a massive hello to everybody. Hope we're all having a great day. This is 50 Pips, rocking and rolling, 13th of March, 2016. So no trade calls or recommendations are responsible for their own stuff. We're here for educational purposes only, and the fact that you're listening to this means you've read to understand to accept all the disclosure disclaimers on the blog, understanding that it's just some technical analysis in a learning context for educational purposes only. So what's going on, guys? So we got a fairly interesting week shaping up, right? If I can manage to talk straight. So basically, a lot of central bank action, right? So we've got RBNZ speaking on Monday. On Tuesday, we've got the policy meeting minutes out of Australia. We've got the BOJ on deck with a press conference and their monetary policy statement. Then when we go into Wednesday, we're going to have, apart from the fact that we've got a huge amount of data out of the UK, but we've got basically the FOMC, right? And then we go into Thursday and we've got the SMB, right? Speaking apart from Australian data, we've got the BOE, right? With rate decision out of the BOE. And then, we got unemployment claims, we got some core retail sales out of Canada, University of Michigan on Friday, et cetera, et cetera. So there's a lot of data, but also a lot of central bank speak. So it'll be very, very interesting, with the most important being the FOMC, but don't forget BOJ, RBNZ, SMB, et cetera, et cetera, et cetera. So one of our favorite charts, or most interesting charts, which are pretty much linked to the inverse relationship to the ES, right, to equities here, was basically is the bond chart, right, the ZBs. What we've discussed was that we felt that this spike high here, right, in February, we call this, whether you want to call it whack-a-mole or whatever you want to call it, but we thought basically that this had the potential to be a very aggressive swing high, and we expected that this level could not be seen again for quite some time, right? So our outlook hasn't changed. The chart is behaving quite nicely. We've had a lot of whippy action, a lot of, this is a big contract, but we're moving quite nicely, steady. Next big level to watch is these 160 60s, but again, we're expecting a move all the way back into these two moving averages, 100 and the 200 moving average. We've been talking about 158s, 157s, but definitely below the 160. So let's see if this can continue to get some traction into the FOMC, and then it'll depend on Yellen. Should they hike rates, who knows? We could really get acceleration here. We'll have to see. But again, we feel that this is one of the most interesting charts out there. Okay, now looking at the other charts here, what we've been focusing on, I think we've had the very decent move on equities, right? So we were talking about the ES, all these range shifts. We talked about all these range shifts, and we talked about the fact that they were moving back into this 1950, 2000, 2050, and we expect these levels to get tagged a rotation back into those highs, and that's still playing out quite nicely. This is still the old contract, right? And something we saw across the board moving very nicely, and even on shorter time frames, right? Even on shorter time frames. If you look at the action here, this was more of our trading chart into last week. You see how once we pressed back above this big resistance, we came back down. We got a nice reversal here, popped back up into the 2000, which we said pivotal, came right back down here. If you pop back to a 1 hour chart, you see a very nice reversal. Actually, we can do that. Bam, 1 hour positive close here, very nice reversal here. And again, market rotating right back into that pivotal level, and bam, through it. And right here, we'd expect a bit higher, and we're talking about that year open level, right? That aggressive move down that started. It looks like the market wants to fill that action. So again, we feel this is very bearish, but it's a potentially very bearish zone, but if it fails, we feel it needs to fail from a higher level. This is still the all contract, right? So if we go back to looking at where we are on the new contract here, you see that here on the monthly, we've made it back into that zone. Very nice little action, right? Also, if you look at the daily, we're pressing that 200 DMA. Now, as we always discuss, the tests of 200 DMAs or these levels are a lot more interesting when it's a level that hasn't been touched for a long time, or you get sharp, aggressive reactions quickly. Right here, the fact that we got front run here and we're moving back into it, very high odds that we actually break it. So there's no way we would be looking to short this early. We also talked about the action on the monthly. Last month, as soon as we closed, we said, if you want to short, you'll probably get a better price. It's very rare that after you see this monthly close, we don't break new highs. If we're going to fail, we're going to fail from higher levels. We've got that whole area that's trying to fill. So again, we really can't complain in terms of the outlook and how the chart is playing out. So we'll have to see what happens. A lot of talk, don't forget that there's a lot of potential for this to continue to catch a lot of people off guards. We still think, and we've been talking about this for a long time, that we were looking for a move back here, and that the higher we got, the more interesting the pot odds were to try and test the short side. But we've repeatedly said that because of the way, and if you go back on one of the earlier free videos on Sunday, we talked about it in detail. By the way, next Sunday we'll try and do a live session so we can take any questions. But the way this was shaping up, the run back up and the double failure here would indicate that this was a lower odds short all the way into the 50 back or into this previous support that should have acted as resistance, and we're waiting for it higher up. So far, pretty much in line. We're looking very interested to see what happens here. More than happy to start to look for tactical shorts, but in no hurry to get caught off guard or be aggressive too early. And very similar thing is happening even if you look at the Dow, beautiful. All the way back there, we had that 1 to 3 risk reward trade off those lows of that 200 for a move back into there, and that's also done and dusted, right? Speaking of nice moves and fills, cable is done. We were looking for this gap fill. We talked about both from a fundy side, from a positioning side, all the discussions on Brexit, and we said that we'd expect this to trade a lot more neutral, and that a lot of the damage would probably be done early, and then the market will have to reassess. So as far as we're concerned, the longs here, even though this has the potential to squeeze higher, as far as we're concerned, the longs off these lows, off this previous resistance acting as support, these are all done. We're all flat on these. These are all done and dusted, and we'll have to see what happens going into the week. Clearly, move back below here, we'd look at a move back towards the mid of this channel. Back above, this has a lot more room to run to the upside, but keep in mind there's still a lot of headline risk with Brexit, so we clearly would not be too interested in trying to chase this at highs. Okay, yen. Again, no change in outlook. We'll be talking about all this basing action. We feel that the 115s still attract. We've got FOMC, we've got BOJ on the wires. This is going to be the key level. As long as the moves into the 115 keep on getting faded, we'd expect to see very choppy action inside this area. We still expect to see 111s catch a bid, all these moves here catch a bid, unless something really catches everybody off guard out of the BOJ or out of the FOMC, but we'd expect this to continue to catch a bid. The fact that the 115 is being defended well ahead of it, if we get into it, we would expect it to break. And again, going into the week, 115 pivotal level. If we start to get daily closes above there, we would not be surprised to see 118s print. Okay. What else have we got here? Gold. We were talking about those highs. This was the famous or the infamous high on the BlackRock news. We thought that this was going to be a swing high and that it's blown its head off right there. We got a very nice move back into these lows, caught a bid, clipped again, and all the way back down. Still, no change in outlook. We feel that even though this is very choppy, the positioning is very, very skewed to the long side. We feel it's dangerous to chase this at highs. Again, dangerous. I don't like the word dangerous. I'll take that back. We think the risk reward does not favor trying to get long at highs. And the fact that we're back into these 1250s, close below, we could get a lot more traction to the downside. We'd still expect buyers to come here, but a lot of pivotal action here. A lot of choppy moves. We don't think there's a lot of edge in trying to trade inside this range. If the 1250s give way, especially from a daily close, we would suspect all the stops below this level to be very tempting to clip, possibly even here. Would not be surprised to see 1200, 1200, 1250, 1350, big chop zone. Clearly, we're not in favor of chasing anything here. USD CHF stuck in the middle of the range. Again, we expect this to continue to catch bids. Very choppy, very sideways, very neutral, right, in terms of chart. CAD, very quickly. All the swing shorts are done for us. We're all done into that 200 DMA. We said we felt the odds were for a little bounce. We got it. It's back heavy. We'd not be in favor of chasing the downside at lows. Keep in mind you've got that 50-week moving average coming in just below. We expect that to find bids, and it still looks like those 135s are getting sold. We're not very enamored with this area, so we don't have any positions here. We're not really looking for anything for now. And then just to look at some of the other commodity currencies, because a lot of people have been asking about them. Again, Aussie, rotation higher, right? Caught a bid very nicely into these moving averages. The fact it started to break above the 200 and basically all this area, right? All this previous resistance. Once it gets through there, you really don't want to chase, right? Now it's finally moved into more interesting previous support that could act as resistance. So we think that we would not be interested in trying to short this here, but any move higher and failure in the higher area is probably going to be interesting for us to look for some tactical shorts, but not overly interested in the chart. As far as Kiwi is concerned, we were looking at this very nice action. We said, you know, on the RBNZ, etc., you had a beautiful area here, right? 3 moving averages. The chart kept on coming higher. It's strange, you know, we said it felt that there was somebody keep on putting a lid on this, smacking this down. We were not interested in trading this. Personally, I didn't trade this at all in this area, but you know, on the move out, if you're just looking at the chart, resistance, 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 right? Market keeping a cap on it, bam, it breaks above, strong break on the funky action on the RBNZ, etc. We come right back down. We hold a whole series of higher lows. We got 3 moving averages, 100, a 250, catching this, and bam, rotation. It's a very nice support. I'm not big fan of this zone because I don't like being involved in this chop. I'm not a huge fan of Kiwi, you know, already a low liquidity, high beta currency. You've got this kind of funky action. You know, I really don't want to get chopped up in the middle of the range. But right here, it looks like it may be trying to test the upside. Very sideways action, not interesting for us at all, even though the chart does give some clues. In terms of Euro GBP, very aggressive action, you know, and then again, another interesting, an interesting example of what we always say. We said, you know, not you, me, anybody. Most people wouldn't know what to do with the news if they had it 2 weeks ahead of time, right? What's important is not what the data is not what the news is how the market decides to react. Don't spend time trying to understand why. The why is not so much important. What's happening in our opinion is important, is how it's reacting at specific levels, right? So here, globally, sideways chop, making a whole series of higher lows, right? Holding this rotation, tried to clip a lot of stops here, right? You see it didn't even make it here, you know, all those buyers coming in. So as bearish as you want to be, even on the Draghi, you know, here you have to respect that the market's finding a very strong bid at a key level and it can't break this level. So we looked at, actually I don't have it here, but we posted a chart with the levels pre the ECB, and we pretty much bounced to the pip at this level, which we had on the chart, which was this one right here, you know. So once this happens, right, what would you expect, right? Especially because it's in a sideways range. You've got the moving averages, which are pretty much horizontal. Aggressive move to take out one side, no traction. Market will likely try and take out the opposite side, bam, rotation higher, right? So here we still have this series of lower highs. The way this is trading, it looks like the market wants to coil to try and take a stab at this upside level, right? I also think that it's not too productive to try and make assessments on where the market is going to go in terms of fundies and reaction in the, you know, in the aftermath in the next 20 hours, even 24 hours of the decision, because there's a lot of stuff the market has to digest. The way I'm looking at it here, and what we found particularly interesting and particularly tradable, is the reaction of the 112, right? You see the market ripped up into these 112s, and clearly the market is unable to find new buyers here, right? Unable to find new buyers, and is holding fairly heavy, right? So there's two things here. Let's stay on the daily to make it easy. The action shows that it's likely wants to try and test the upside. We're structurally bearish euro and looking for shorts, or already tactically short. And any continued failure below the 1200, we feel should bring a move back into this mid-range. Okay, now up to you to decide whether you consider this a strong support for a retest of those highs and the rotation higher to continue or not. The way we're going to look at it is very simple. Number one, the failure here means bullish. The fact that it's very aggressively sold at the 1200 means that there's likely going to be a little bit of retracement or move to the downside unless we can close the daily below the 1200. There's a lot of base support here. If it can hold, then it could repeat to test here. If it can't hold here, we expect extremely high odds for the market to break out these lows. We feel that the pain trades in terms of stops and people getting caught off guard is stops here, stops here. Anywhere inside here is the far, far west. A lot to do about nothing. Big chop area. Will it be tradable? Sure. Is it going to be a super high odd area? Probably not. Okay, that's the way we're looking at euro. Again, we'll have to see what comes out of the FOMC. Cable, again, remember, if you look at it in terms of those moving averages, it's interesting pop here. Keep in mind that there's an awful lot of previous support acting as resistance here, and the same way we said we would not be chasing shorts here, especially in terms of the Brexit, etc., etc., etc. We would clearly not be chasing longs up here, okay? And so that's pretty much where we stand, guys. So if anybody has any comments, any questions, any chart we haven't looked at, any chart anybody wants me to post, just hit me up on Twitter. Thank you so much for the guys who are subscribed, the guys who like the stuff, who retweet the stuff. And keep in mind that next Sunday we'll likely do the 1 hour live webinar on Sunday, so I'll post that up on the blog. But if you've got any questions for that, don't hesitate to put them up on the blog. If you want me to prepare something for the live session, if you have some questions that are a bit more complex. And as a reminder to everybody, most often than not, a lot of the answers on of possible questions or questions that people have when they write in on the blog, they've pretty much all been tackled in the interviews. So I would strongly suggest that you go through the interview category on the blog, and you'll see a lot of the questions are tackled there, okay? If not, I'll be more than happy to tackle them again next Sunday. Have an awesome one. Talk to you guys soon. Take care.